Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We begin our review of global economy with key releases in the US, Europe, China, and Japan. The U.S. economy added jobs at a faster pace in January, and combined job addition estimates were revised higher by 126,000 for November and December. Moreover, wage gains over the 12-month period was 4.5%, suggesting that tight labor market conditions are likely to persist, and cooling inflation further will be a harder task. The jobless rate remained at 3.7% in January, and the number of unemployed people was little changed at 6.1 million. The labor force participation rate at 62.5% was unchanged in January, and the employment population ratio at 60.2% was also little changed. The strong jobs report surpassed expectations set by economists amid rising demand for professional services and healthcare staff. The euro area GDP growth slowed to 0.5% in 2023 and declined for the third year in a row after consumers struggled with elevated prices and businesses labored under high interest rates. The euro area inflation dropped to 2.8% in January, and the core rate of inflation, which excludes food and energy prices, slowed to 3.3% and dropped to the lowest level since March 2022. The overall inflation declined because of the continued weakness in food and energy price inflation. Rate decisions and job markets updates in the US, Europe, and Japan and factory activities in China and Japan dominated investor sentiment in this week. Despite the sharp jump in interest rates and global market uncertainties, the labor market in the euro area has remained resilient. The seasonally adjusted unemployment rate in the euro area held steady at 6.4% in December. China's private survey of factory activities expanded according to a private survey, which tracks companies that are export-focused, but activities shrank across a broader spectrum of companies tracked by the government in January. In Japan, the industrial production was down 0.7% on an annual basis in December. The powerful earthquake in the Noto Peninsula on New Year's Day had little impact on industrial production data. However, the recent halt in production at the Daihatsu plant over rigged collision safety tests is likely to negatively impact production in January, according to the ministry. Let us review key events in global bonds, currencies, and commodities market last week. The yield on the 10-year U.S. Treasury hovered near 4.0% after the U.S. economy added more than expected jobs in January, dashing hopes of a rate cut at the next policy meeting. Gold rose 1% in the week to $2,036 an ounce and erased most of the weekly gains after strong U.S. jobs data dampened the prospect of an early rate by the Federal Reserve. The WTI crude oil prices fell 5% to $73 a barrel on early signs that tensions in the Red Sea may diffuse in the coming weeks and avoid further supply chain disruptions. Natural gas prices rebounded 20% from the 6-month low of 30 euros per megawatt hour amid worries of supply chain disruptions, but gains were limited because of the elevated gas storage levels in the region. The euro hovered at $1.08 amid general strength in the U.S. dollar, following a strong U.S. jobs report signaling a diminishing prospect of a near-term interest rate cut. The yen traded above 148 against the U.S. dollar on speculation that the Bank of Japan is less likely to shift its yield curve policy and maintain its ultra-loose policy. We now review key developments in financial markets across the world last week. The S&P 500 and the Nasdaq Composite extended weekly gains for the third month in a row after investors cheered positive earnings from mega-cap tech and energy companies, and resilient economy added more than expected jobs in January. European markets closed mixed after central banks of the UK, US, and Sweden followed the ECB lead last week and held rates steady this week and cited the need for restrictive rates until inflation is on a sustained downward path to the target level. The Nikkei 225 gained in the week, tracking higher levels on Wall Street and higher earnings from leading Japanese global companies, while domestic travel and entertainment-focused companies reported a surge in revenue and earnings. China's market indices dropped sharply on the ongoing property market woes and continued selling by foreign investors. India market indices welcomed the interim financial budget, which estimated a decline in government borrowing and rising infrastructure spending in the next fiscal year. Let us shift our attention to market movers of the last week and earnings update from leading companies. Amazon.com jumped after the online retailer reported better than expected quarterly results. Apple declined after the computer device maker reported better than expected sales in the latest quarter, but the company's struggle in China overshadowed overall results. Meta jumped after the online networking platform operator reported a sharp rise in revenue and earnings and announced its first ever dividend. ExxonMobil and Chevron jumped after the two leading U.S. oil companies reported decline in quarterly sales and earnings, but rewarded shareholders with dividends and stock repurchase in 2023 on bumper annual profits. Qualcomm declined after the chipmaker reported better than expected fiscal first quarter revenue, and the company's current quarter sales outlook fell short of expectations. H&M dropped after the Swedish retailer appointed a new chief executive and the company missed its operating profit estimate. General Motors jumped after the company reported better than expected quarterly earnings on flat sales in the fourth quarter. Flutter, the parent company of FanDuel, listed its stock on the New York Stock Exchange on Monday, and the company will maintain its listing on the London Stock Exchange. AMD dropped after the maker of advanced semiconductors offered a weak revenue growth outlook. Microsoft reported higher than expected quarterly earnings driven by double-digit growth in its three key business segments. Starbucks lowered its annual sales growth outlook because of the weakness in its second-largest market, China. Alphabet, the parent of Google, declined. The parent company of search engine Google reported weaker than expected advertising revenue in its latest quarter. Next week, world investors are looking ahead to the release of earnings from major U.S.-listed corporations, including Alibaba, Arm Holdings, Caterpillar, Eli Lilly, Ford Motor, McDonald's, PayPal, PepsiCo, and Uber. In Europe, investors are looking ahead to the release of Germany's foreign trade data, factory orders, and final reading on inflation. Across the Pacific, China is expected to release its inflation and current account data for the fourth quarter. In addition, central banks of India, Philippines, and Australia are expected to keep rates unrevised. You can review daily U.S. and global financial market news, earnings releases, SEC filing feeds, stock movers, and economic updates on ticker.com and 123jump.com. You can also get the latest financial books on Redera.com and keep up with financial industry events on eventsinamerica.com. That's all for today, and we will see you